Thank you for tuning in to another edition of the Vulcan Report. Alright, we have a lot on the plate today. First thing you will notice is that we have a lot of green and we have some red also. The green highlight means those are buying. The red one means those are selling. Alright, the first item on the list is Apple. Looking to get long Apple. Get long at 254.90 with a stop at 248.92. Now, one thing I want to say about these orders is this: we should see follow through on Tuesday's breakout. So we expect some continued follow through. I think right now the overall stock market wants to actually become bullish. There's also going to be a small window of opportunity where I believe that gold and silver and commodities are going to rally in unison with stocks and bonds. And then after that, we'll see a decoupling where the markets will start to move outside of those positive correlations. So we'll watch and see what happens on those. Another thing I want to mention also is, remember, we do use stop limit orders to enter the market. We also like to use them to exit also. The only downside with using them to exit is sometimes the markets can gap open lower or higher than where we would like them to be. That's the downside with exiting on the stop limit. But it also helps you to reassess yourself when you're using the stop limits, because then if the market trades beyond your stop limit price, you can decide if you want to cancel your place to stop and move it somewhere more reasonable, or if you just want to get out altogether. It's up to you, or however you want to manage that position. But as far as entry points, we always enter on a stop limit. You don't necessarily have to use a stop limit on your exits, for your stop losses, but you always want to enter the market with a stop limit order. It's just for your protection. Alright, as you notice here on the Apple, we don't see any pulse waves showing up here. This is just a regular buy, looking to pull out at least $1.50. Alright, on the next one here, Amazon. We do see a possible pulse wave coming into the mix here. As you can see, our buy-in is at 130.13 with a stop of 126.63. And we believe that this is going to continue to push higher and create a secondary pulse wave. So we're looking to probably get up to possibly somewhere between 135 and 140 on that one. Alright, the next one is Boeing. That's going along at 67.02 with a stop of 64.53. After that, we have Baidu. We do see a possible pulse wave scenario in the mix here. That's a buy-in of 86.13 with a stop of 84.21. If we push beyond this pulse wave resistance 88.32, we will add to the position. So you will get in at 86.13 and put a second order in to buy more at 88.32. So you'll be adding to that position, looking for this particular security to get upwards and beyond probably $100 a share. Alright, the next one here is Cisco. It should have been highlighted as red. That's my oversight. That's a sell at 21.93 with a stop of 22.30. And no pulse wave to speak of there. Alright, next on the list, you can see we have Chevron, DBA, DBM, the ultra short Dow, and the regular Dow ETF, the diamonds. All buy-ins on this one. Take a look at the pulse waves here. We see it coming in on the commodity side and on the energy side with Chevron. Alright, look at the red here. We have the ultra short oil, we have the ultra short Dow, and we have both FAS and FAS. So we're looking at the 3 times bull and bear. For whatever reason, these markets seem to want to decouple. One note of caution on the double and triple ETF. Sometimes they do move a little crazy outside of the box, so to speak, away from their counterpart. And so you'll get these mixed signals where you can both go long and short at the same time. So we see both of these pulling back. at least intraday for Wednesday. Alright, the next long list of buys, we have the Australian dollar currency ETF, the Canadian currency ETF, GLD, Glaxo, Halliburton. You can read all of these. Grant Stephen, but just remember how to read the report. One note on the GLD, we did get long that one based on yesterday's entry point. As you can see here, this market did put in a pulse wave, and that old resistance was 118.42. That should hold as a support now, and we're looking for this to get up to about 125 by the end of the week as people begin to accumulate gold again and silver. Alright, this is intraday buy-in to add to yesterday's position at 119.98 with a stop of 119.58. We may or may not get there today, so we'll just have to reevaluate that. Now, those of you who actually took that trade yesterday, if you used the stop limit like I did, then you're still in this one. So you're going to want to go ahead and replace that stop, put it somewhere where you're comfortable with. You know, where you don't want to put it beyond what you can stand to lose. In other words, so look at, use your money management to think about where you want to put that. But we're still holding a long outlook on this one. As you can see, it's still showing that it's in an uptrend. Okay, so that's pretty much it. Just read through these. If you have any questions, just hit me up, and I will also post this on the blog so you can download it and have it for your records. You can peruse it at your leisure. All right. Until then, remember, take what you can, give nothing back.